Hello guys. Today we discuss about vehicle insurance in US. Vehicle insurance in the United States, also known as car insurance or auto insurance, is designed to cover the risk of financial liability or the loss of a motor vehicle that the owner may face if their vehicle is involved in a collision that result in property or physical damage. Most states require a motor and uninsured motor vehicle fee may be paid to the state which offer vehicle owner the option to post cash bond. See below. Article 4 of the US Constitution protect the right of citizens in each respective state when traveling to another. A motor vehicle owner typically pay insurance a monthly fee, often called an insurance premium. The insurance premium a motor vehicle owner pays is usually determined by a variety of factors, including the type of covered vehicle, material status, credit score, whether the driver rent or own a home, the age and gender of any covered drivers, their driving history, and the location where the vehicle is primarily driven and stored. Most insurance companies will increase insurance premium rates based on their factors and less frequently offer discount. Insurance companies provide a motor vehicle owner with an insurance card for the particular coverage term, which is to be kept in the vehicle in the event of a traffic collision. As proof of insurance, recently states have started passing laws that allow electronic version of proof of insurance to be accepted by the authorities. Coverage generally. Consumer may protect it by different levels of coverage depending on which insurance policies they purchase. Coverage is sometimes seen as 20, 40, 15 or 100, 300, 100 whatever. The first two numbers seen are for medical coverage. In the 100 over 300 example, the policy will pay 1 lakh per person up to 3 lakh total for all person. The last number cover property damage. The property damage can cover the other person vehicle or anything that you hit, any damage as a result of the accident. In some state, you must purchase personal injury protection, which cover medical bill, time lost at work, and many other things. You can also purchase insurance if the other driver does not have insurance or is underinsured. Most, if not all, states require driver to carry mandatory liability insurance coverage to ensure that their driver can cover the cost of damage to other people or property in the event of an accident. Some states, such as Wisconsin, have more flexibility proof or financial responsibility requirements. Commercial insurance for vehicle owned or operated by business function quite similar to private auto insurance, with the exception that personal use of the vehicle is not covered. Commercial insurance pricing is also usually higher than private insurance due to the expanded types of coverage offered for commercial user. Insurance provider. In the United States in 2017, the largest private passenger vehicle insurance provider in terms of market share were State Farm, 18.1%, GEICO, 12.8%, Progressive Corporation, 9.8%, Allstate, 9.3%, and USAA, 5.3%. Insurance is secured either by working with an independent insurance agent or with provide policy purchase through online sites. Liability coverage. Liability coverage, sometimes known as casualty insurance, is offered for bodily injured BI or property damage PD, for which the insured driver is deemed responsible. The amount of coverage provider, a fixed dollar amount, will vary from jurisdiction. Whatever the minimum that insured can usually increase the coverage prior to a loss for an additional charge. An example of property damage is where An insured driver or first party drive into a telephone poles and damage the poles. Liability coverage pays for the damage to the pole. In this example, the drivers insured may also become liable for other expenses related to damaging the telephone poles, such as loss or service claims by the telephone company, depending on the jurisdiction. An example of bodily injured is where an insured driver caused bodily harm to a third party and the insured driver is deemed responsible for the injuries. However, in some jurisdictions, the third party would first exhaust coverage for accident benefits through their own insurer and or would have to meet a legal definition of server impairment to have the right to claim or sue under the insured driver or first party policy. If the third party shows the insured driver, liability coverage also cover court cost and damage that the insured driver may be deemed responsible for. Thank you.